So right now, oil hovering just above $40 a barrel. Yesterday, we got another report showing an increase in U.S. supply. It looks like OPEC countries are producing more than ever. And at the same time, we're concerned about a slowing China. How much lower do you think oil is going to go?
It's really hard to tell because it depends upon what global demand shapes up to be over the coming months. The industry is feeling the experience of its own success. Based on forecasts back in the 2010-2011 timeframe, the industry invested billions and billions of dollars to meet global demand based upon predictions of global growth. Well, the global growth and demand didn't really materialize because economies were not strong enough. Now we have the situation where we are overproducing, and nobody wants to cut back because, if anything, they want the cash that comes from the sale of oil to either pay their loans or pay shareholders, whatever it is. So nobody wants to decrease production, which is only complicating the problem further until we get more global growth and demand.
John, we've seen a minor tick up in rig count, but the fact that there's any tick up in rig count I find just shocking given what we're seeing with pricing. What is compelling the continued drilling domestically with this collapse in prices of crude?
Well, companies operate according to a plan, and each company has its own plan with respect to how much production it wants to make. And so companies on their own will want to make their production plan because that's how they're measured. That's what they promised shareholders. And so what you see is not really an anomaly. It's actually companies performing according to a plan. And when they do that, they must have the economics all set up to do it. But it may be economics just to produce cash because they have loan covenants that have to be covered, and they've got to have the cash to do it. Or there are some companies that have really achieved amazing productivity improvements, and they can afford to drill more and sell more because of the productivity improvements, which have lowered their costs significantly.
Yeah, the productivity story is a huge part of this that we don't talk about enough. John, earlier this week, the EPA came out with a proposal for new regulations to cut methane gas emissions from oil and gas producers by 40% over the next 10 years. How much is that going to hurt the producers?
Well, for most of the major companies, they've been on an effort over the last decade to reduce methane emissions voluntarily for two reasons. One, the sustainability issue that it represents, the knowledge that this methane going into the atmosphere can't be good, and so let's reduce it for that reason. But secondly, why waste the gas? When there's a market for the gas, let's capture it. Let's get some value out of it rather than just burn it off or rather than waste it. The whole concept of zero emissions has been in the industry for a long time. In some respects, the industry is leading the way and government is following. And with this government in particular, there's a very strong desire to control the industry, as if the industry doesn't know what it's doing. And for the last 7 years or so, this administration has been determined to tell the industry what it can and can't do when the industry really knows what to do. Now, there may be some aberrant operators out there who are resistant to any regulations because they just don't like to be regulated. And those are the exceptions in this day and age, not the rule, in my opinion.
John, I know you're not at Shell anymore, but when I look at this, when I look at big oil and the capacity of the big oil companies to sort of replace their reserves as they take the oil and gas out of the ground, Shell is sort of worst among them in terms of reserve replacement and has done so in a very expensive way. What is it about the difficulty that Shell in particular is having there in replacing their reserves and finding new places for oil?
Shell has had a view for a very long time that materiality matters, and it looks for the opportunities that will provide to its shareholders the benefit of long-term material success. And Shell has also had a pioneering part of its spirit over the many decades that it's been operating, whether it's the North Sea, whether it's Nigeria, whether it was Indonesia way back 100-some years ago. And so there is a natural instinct in the company to go for what's big, to go for what's going to produce long-term value for shareholders, and to really test its technical capabilities. And it is one of the leading technical companies in the world to see to it that whatever they do no harm, they do it safely, but they do it over with a long-term view, a 10, 20, 30-year time frame, on the horizon. That's the nature of the company, and that's what I experienced when I was there, and I haven't seen any change since I left.
John, talk to us quickly about what you think about what is going on off the coast of Alaska. You know, global oil majors, they're all cutting down on CapEx, and right now Shell is doubling down on the Arctic. Does that make sense?
Well, I was there when we made the decision to proceed and got the leases back in the 2006, 7, and 8 timeframe. This is a potentially extremely important resource for the 2030s, the 2040s, and beyond. And anyone that thinks we don't need oil in the 2030s, 40s, and 50s is naive or simply ignorant of the fact that the world will need oil. And as I said, Shell is a pioneer in this respect and is developing the technology to be successful. So it has to proceed based upon what it can afford, and the decision to proceed this year is a very important decision because the leases have a time frame on them, and if they don't see material value potential, then they might forego the extension of the lease. You never know.
Shell similarly making not just bets on oil, though, but bets on gas and LNG even. It seems like the LNG market really depends on growth, particularly in China, Japan less so, and we're certainly not seeing that right now. It seems like there's some near-term risk for Shell in terms of performance with the big bets on LNG.
Well, I wouldn't lose sleep over it because I think that China's dirty air, you may have seen recently the loss of life in China due to the dirty air. Gas and China are going to be married together for a very long time. And I think the bets that Shell has made and other companies will pay off over the medium to longer term, even if there are some short-term worries.
All right, John Hofmeister, CEO of Citizens for Affordable Energy, ex-Shell executive, and a great guest.
Yes.
Thank you so much, John. It was great stuff.
Thanks, John.